Hello traders, Gary Wagner here, 9:45 in Honolulu, 3:45 in New York on Thursday, the 21st day of May, 2015, and this is the daily report for gold and silver. We do have the precious metals under pressure again today, dollar trading higher, stocks nominally higher on the day. First to gold, we're looking at gold trading off about $3 on the day, $270 to be exact at 1206. Low is quite interesting at 1280 and the high at 1240. Silver is trading higher this morning, trading up roughly 4 cents on the day, 3.7 cents at 17.15, low 17 even, high 17.25. So traders, I want to start today's show by looking at a 720-minute chart. This, of course, is straight candlesticks. You can see really the most interesting thing that we have seen this morning was this low that we made right at around 1200, and you can see that after coming down like this could be, in terms of a candlestick pattern, it could be viewed as a hammer, and that's a bullish type of candle. We'll have to see what happens, but we have seen this market come down substantially from these highs, at about 1230 plus, to move back down. This, of course, is the key level that we want to watch if we see this market begin to move back up, is around the 21 level. But most importantly, we want to see where this market's going to find support, because 1200 is definitely, on a psychological level, a key critical area to watch. So one of the ways that we want to calculate a longer term move is to look at some of the short term studies that we do here, and by looking at those, get an idea of a pivot point or a point in time in which we feel we could see a key reversal in the market. And I draw your attention, this is 240 minutes, so 4-hour chart. On this top triad, so to speak, what we have here is Japanese average candlesticks. We also have a very, very short-term Elliott wave count. And that wave count is looking for the market to kind of bottom right in this area, just below 1200. So we could be close to seeing some sort of a bottom. And when we look at this market, yes, we've been caught within this defined range. We did have this market come up and test some higher highs only to break back below that. But that doesn't mean we won't see really the market find some support here and then begin to move up. When we look at our moving average convergence divergence, it's not quite ready. It's still moving down, and we have this momentum line here is beginning to wane. If we look at our straight momentum index, of course, you can see that the negative pressure, or the size of the trend, or the strength, I should say, of that trend has absolutely been waning, and we're moving back towards the zero line. We'll have to see how it reacts, but as I said, it does appear as though we want to see what happens if it dips below, say, to about 1192. We should find some signs of support and get an upside wave within the market. So there's absolutely no doubt the gold prices and commodity complex as a whole have been dollar driven over late. And we saw this market really from June of last year just steamroll up. It steamrolled up to this high at around 100. Came back down, found some support right at around 96, secondary top here, and that's when we began this decline here. We talked about different places we could find support. The first level that I was really looking for was right around 94. It did break through that point, but ever so slightly, and you can see over the last couple of trading days, this being our daily chart, we've seen this market move back up tremendously, finding resistance now at about 96. Today we do have lower pricing when we look at it on a daily chart. However, it looks quite different when we take it to a weekly chart. And on this weekly chart, you can see, even though it's come off of these highs, and this is where that resistance is, we are at Thursday, so we're, four-fifths through the week, so to speak, the trading week, that is. And we've also hit the first of our numbers of where we could look for some expectation of support, which is right in this area here. If it does break below there, we'd have to look at something a little bit lower, maybe 92, but it does appear as though the market has found support and will be moving back up. If that's the case, then what we'll probably see is higher pricing in the dollar, and if we do see that, we're going to see gold under some pressure. Now, that doesn't mean that gold can't trade higher throughout next week, but if it does, it is the scenario, once again, of a salmon swimming upstream. However, when we look at the monthlies, they're giving us a different story because, of course, this is long-term. We would never trade off a monthly chart, but that's still looking at the market. This market still is overbought according to our stochastics and overbought according to the moving average convergence divergence, and has appeared to topped out, as I said, roughly at 100. So we want to pay attention because longer term, it is predicting that we could see a continuation of the lower pricing after hitting 100 on the index. So traders, to close the show out, I do want to take a look at silver. And silver, as you know, over the last couple of weeks, I've seen almost a disconnect between silver and gold. On one hand, they do trade in tandem, although they have points in which they separate, like today where you have silver up and gold down. But more importantly, when we look at this on a technical basis, daily chart, standard candlestick format, and our channel that we're looking at right now, the one thing that we can see is even with this decline in price, and gold doesn't exhibit these same tendencies, we do see the market having gone to the bottom of this channel and trading slightly higher. So I'm a little bit more optimistic in terms of silver prices over this next week than I am with gold. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for the weekly wrap-up and review. Bye-bye.